Good morning. Happy hump day. It's Wednesday, June 12th. It is also Fed day. It's a big day. Yesterday, huge day. We're going to go over Apple. We're going to go over NVDA. We're going to go over a PEG ratio. We're going to go over why Warren Buffett got dumped his Apple stock after yesterday. Affirm. Why did he dump Taiwan Semi when that's up yesterday or today? Brad Gerstner, great conversation. We'll go over NVIDIA. We'll go over Oracle earnings. Tonight we have AVGO. I did see the VRT, Vertiv CEO on CNBC yesterday. We'll go over that stock. Celsius, is that a buy on the dip? AppLovin, is that a buy on the dip? Is an AI bubble coming up? Taiwan Semi. We'll go over social requests, including DELL. That's the entire show. Thank you. Good night. I want to clarify one thing. When I said I was taking down Bird's Nest yesterday, I got a couple of flack from a couple of folks, just a couple, not too many. These were not built nests that had eggs in them. These were not birds that were living there. They were starting to build the nest. It was in between my gutter and my house. It was going to damage my house. I did not hurt birds. I did not chase them away. Miss Penny, my little bird chaser, did chase them off the lawn. Get off my lawn, kids. But I did not hurt a bird. I did not re-nest an area. They're simply up in the trees behind my house now. I just, simply said, hey, if birds could talk, I would have negotiated with them. We would have had a nice discussion, but they don't talk. In fact, the nest, they kept going back and forth between the two gutters. So, but I didn't do anything. Now, where are we on SPY? QQQ. We'll look at SPY too. QQQ, remember, I said until old resistance turns into new support. So you can see the resistance there at 450. We use that as support until we got this pullback, which then made 460 the new support level. Well, where's the new resistance? Because we just continue to go higher. Now, is the market stretched? You look at the weekly on the Qs. Yes. Are we up too high? No. The MACD has, can go higher. The RSI is currently at 67. Yes, we are overbought. Yes, we are due for a pullback, but catalysts are like this. Remember, we talked about yesterday. The theme of yesterday's show was higher for longer, was basically, let your winners run. Let your winners run. It's when the story changes that you get rid of the losers. It's when the story, the charts show you, hey, something has changed dramatically and fundamentally in this stock. Get out. The Qs, nothing has changed. If we look at TQQQ, this is a fantastic rally in June. The last 2 years, we've had some really good rallies in June. And we've had some really bad, drops in August, September, and October. I said that I think we're going sideways. We just have to find a top. I am not out of this market. I am completely in. Brad Gerstner said yesterday during his thing, and he said it specifically, and I have a note about it. He's only 60% in this market. He doesn't trust it, but he's 60% in. He says, is that glass half full or is that glass half empty? That's glass half full because he's 60% in. So, he says, hey, we're a little bit stretched. So he wants to take his side a little bit safety. But here's the 4-hour algorithm on TQQQ. Got you out with a 15% gain. It's a great gain. You know what? If you're still sitting and you said, I don't want to get out of this one because we're still running, even though they told me to get out, I don't want to get out. 30%. 30%. In 48 days, 66 bars. Let's just say you did get out, you got back in 3% over 5 days. And what's this? This is my 4-hour algorithm. And in the 4-hour algorithm, you can get it too. Sign up for Trendspider. It's as easy as that. Trendspider is on sale, 50% off. You get 6 months for free, $53 a month. Use the link in the link tree right here. Then you're going to email me. My email address is right up top. Once you sign up, I will send you everything, my scanners, my watch list, all of the algorithms, the 5-minute algorithm, whatever you want. But TQQQ, remember that one because we will be trading that in October. You want to know why? Or I'm sorry, not October, July. You want to know why? Because seasonally, TQQQ is up 100% of the time in July, with a mean change of 13%. Is this going to be the 1 year in the past 14 years that we don't have a positive change? TQQQ, it's a triple levered ETF. We are going to trade that one in July. That means we buy it at the end of June. But so far in June, it's been a fantastic, fantastic winner. So I want you to keep an eye on that name. You know what? I did say we'd go over SPY because I think there's some people who love SPY. I'm not a fan of SPY. I was just looking. I beat SPY, on the regular basis, and it's by holding the Magnificent Seven. If you hold the Magnificent Seven, you're beating SPY. Probably for the last 20 years. There's been, I think, 2 years that you haven't beaten the S&P. But here's the support levels on the S&P. I would put an additional support level up here at 532. You're trading at 540, 541. 532 is going to be your resistance level. Your support level. I'm sorry, your support level. We're at all-time highs. Are you extended? Absolutely. Absolutely. But you don't get off a train that is still running. And this train is still running. Understand the train is still running. Now, one train that does run, we can talk about Alpha Picks. And look at the performance of Alpha Picks. This is their yesterday's performance review, the portfolio review. Alpha Picks portfolio is up 120% versus the S&P's 41% during the same time period. There was a question, are they flubbing numbers? No, that's the portfolio. That's not like one stock. That's the portfolio. And it's since July 2022. Now, 6 stocks within the Alpha Picks portfolio have returned over 100%, and they call it the winner's circle. 8 stocks have returned between 50 and 100%. I think there's 20 stocks in the portfolio. According to FactSet, and this is great, 79% of the S&P 500 companies reported positive earnings per share surprises in the first quarter of 2024. That's fantastic. That's great. Alpha Picks had 33 out of 35 stocks. I'm sorry, there's 35 stocks that beat the earnings per share expectations, 94%. That's why they're beating the S&P. Now, we talked about not getting off a running train. How do you get Alpha Picks? It's 2 data structure driven. You go down here. It's the third link. The third link, it's Alpha Picks. You get $50 off. Again, we talked about 120% versus the 35%. It's 2 data-driven stocks each month. One comes on the 1st, one comes on the 15th. They alert you when to sell. They alert you when to buy and when to sell. This is a buy and hold strategy. And that's, I believe in this portfolio. Trust me. Before I actually became an affiliate, I researched this stuff. I get invited to be an affiliate by a lot of these stock companies. And I turned down the majority of them. Trust me, I've turned down quite a few. And it's because I just don't believe it. This is one portfolio. And I was super against anything that said, hey, buy this now or sell this now. Their performance convinced me. And trust me, it's stocks that I would have never looked at. But their performance, if you're an Alpha Picks member, then you got a portfolio update yesterday, so take a look at it. And this is one thing that I want to say. You don't want to trust things that you read on the internet. You want to do your own research. So Shay posted this yesterday. Ever heard of the PEG ratio? It's Peter Lynch's go-to metric that if a score is under 1, it hints at a bargain, while over 2, it might be a bit pricey. Let's see how the big tech stacks up. He posted Apple is 4. Well, Apple is actually 3.29. No, it's not 4. Tesla, he posted, I don't think I did Tesla. We can go to Seeking Alpha and we can. Tesla, he said 3.3. Well, let's go over to Seeking Alpha because they have the PEG score and you can take a look at it. And if we go over here to valuation and we look at Tesla, remember he said 3.3. Let's look at the PEG ratio. It's not 3.3, it's 6. It's 6. 6. He may be talking about the trailing 12 months. That's 2.93. So it's even better of a bargain. My point is, even your best person out there, he has taken this, and I don't think he necessarily updated it. And so, yes, these are expensive, and yes, they are. But I do believe in a lot of these stocks, even though the PEG ratio, you can take a look at Amazon. The PEG ratio over the trailing 12 months is 0.07. He has it as 0.7. That's a big difference. That's a major, major difference. So I trust Shay. Shay does fantastic research. He's got a fantastic portfolio. I'm just saying, hey, when you see this stuff, that's what do your own research looks like. Now, we talked about May CPI. Core CPI rise 3.4 year over year. There was a 0.0 month over month increase. This is good news. That's why you're seeing the futures up. The market just opened. It should be up. It's a significant catalyst. This is why you want to be in the market. You don't want to be out of the market. We'll talk about Apple, but you don't want to be out of the market. Now, GameStop, it's holding its annual meeting tomorrow. Do they put Roaring Kitty on the board? Remember, there are 4 board members right now. Roaring Kitty did a cat head with the number 5 in it. Are they putting him on the board? Ironically, I think it was Citadel or someone else, one of the big shorts. I don't know who it was, but he announced today he's no longer short GameStop. Now, I will tell you, you trade GameStop on a short time frame. I would argue that this 5-minute, you want to look at entries on the 5-minute. You don't want to look at the exits. You want to exit as you're looking at it. Because you can look at this one, 28.94, it got you out. I don't think you should have been out. You still had confirmation. And you could have run this one from 28 when you got you in here all the way up to when you lost confirmation here after hours. This is, 3 hours? You made 8%? It's pretty good. Once you lost confirmation, you had your 8% gain. Now, would I get into this one? No. I'm not trading this one. I am not trading this one. This is crazy, and I'll show you a couple of tweets that are interesting on this one. You can look on, does Ryan Cohen have a shock for us? This is GameStop, an incredible story. They just diluted 75 million shares. They put 75 million shares and sold them at the market rate. Their market cap is $9 billion. They raised, I think, $2 billion in cash. And they diluted shareholders, and the stock was up 74% year to date. It was up 20% yesterday on them diluting shareholders. It's just it's one that defies logic. When you tell me, hey, I'm going to take half your stuff, I'm going to cut the value in half because take your house. I'm just going to cut it in half. Because, the mortgage company says, well, we're going to have somebody else move into the left-hand side of your house. That's what they just did. They cut you in half. That's what's crazy, and I don't get it. GameStop just completed their $2.137 billion. I mean, that's a good company. Let's talk about Apple, because Apple went nuts yesterday. Why? I have my theories. And let's take a look at my theory, because I do think there was some shenanigans going on yesterday with Apple. And I don't want to say, hey, these are the crazy people. This is the big money getting in here, blah, blah, blah. But if we look at Apple on a 5-minute chart yesterday, when I was recording the show, it did nothing. I mean, it really, really did nothing in the pre-market. So post the earnings or the WWDC the day before, you can see it just continued down. There was nothing. And then what happened at 9:30? Well, here's my theory. I think Wall Street folks were talking to their private clients, private high net worth clients. Now, I am not one of those people. Fidelity did not call me. I am the middle of the pack for these guys. Yes, I'm high net worth, but I do not get any special treatment. I don't believe, even though they make me feel special all the time. But I do believe that their researchers said, you know what? Tell your private clients we're going to upgrade them at 9:30, and we're going to release some notes. And so everybody started releasing notes about how the 95% of the phones, of the iPhones, will need to be upgraded to get the Apple Intelligence stuff. Say they upgrade 20%. That's a crazy amount of phones that will be sold over the next year. That means Apple may come out of the, lowering their revenue. They may come up. So you can see it. It's popping again. It's up 1.21% again. It just opened up. Again, you can see at 9:30, that thing just popped up. It's crazy. We are well above. Remember how I said old resistance turns into new support? 200 is now your support. do not think that we may not go back to 200. I don't think you're going back below 200, but do not think that after this rally, we may not go back. And you know, it was brought up yesterday. Warren Buffett sold 20% of his, or he sold what, 3%? It was like $200 billion or something, some crazy amount. Now, this Amit was arguing, or kind of hypothesizing. He wasn't arguing. He was very, deliberate about it. And he said, would Buffett have sold had Apple told him that AI was coming about and we should see an upgrade cycle, blah, blah, blah. I would argue that Buffett knew exactly what he was doing. And the reason I say that is it's become a large portion of his portfolio. I think he didn't feel comfortable. I don't think that he felt like it was undervalued. And he said, you know what? I'm happy with the price. I'm still going to hold it as my largest holding. I'm just going to trim it. And that's all he did. Do I blame him? No. He didn't know. He didn't know that the cycle was going to take it. I'll tell you also, Buffett sold Taiwan Semi last year. Taiwan Semi. I mean, we can take a look at Taiwan Semi. If you want to take a look at Taiwan Semi, after he sold it at $100. $100. Now, he bought it at like 90. So he made, in a short amount of time, he made a fantastic trade. But when he sold it, it was $100. And I believe that was like January he announced that. It might have been December. But he said he sold it at $100. You're at $171 today on Taiwan Semi. So the point is, again, yesterday's was, hey, let your winners run. Today's entire show, don't listen to a douche. And I'm not, I don't say a douche just because they're douche. Shay posted that thing. Warren Buffett sold his Apple. You didn't want to get out of Apple. Warren Buffett told his Taiwan Semi. Another thing that Warren Buffett did, by the way, was he sold the airlines back in 2020 at the low. And then they went up like 40, 50% over the next 3 months after he sold out of them. So Buffett, while he's the greatest investor of all time, he's not perfect. He's not perfect. But it's important to understand you need to do your own research. You need to have a portfolio that you feel comfortable with, that you can sleep with at night, and not listen to other people. I have held on to my Apple. Like I said yesterday, I sold 1 or 2 shares to get myself comfortable if we were going down to 190. We ain't going down to 190. We ain't going down to 190 on Apple. You ain't getting that again. It's up 1.6. It's almost up 2%. I mean, again, in that crazy candle, we're almost up 2%. It did nothing in pre-market. 9:30 comes, and this one just gets bought up. I don't know what's happening. One of the companies that I've been completely wrong about is Affirm. They are killing it in the buy now, pay later space. Now, Affirm is up another 6% after being up 11% yesterday. I don't get this. I don't understand the space. I am not investing in it. But when we look at Affirm, we have some room to go up. Your gap is up here at 44. You've passed the 200-day. This now, the 35 now turns into support. Your 200-day turns into support. They don't have earnings coming up. This was the catalyst. This one could continue to move. There is some significant momentum behind this. So I think that one's interesting. Keep an eye on it. I don't understand the space. I'm not getting into it. But with them partnering with Apple, it brings them into 2 billion devices that are out there. That's a crazy one. Now, today, ARC, which is Cathie Woods, is expected to value Tesla for 2029. That could be an incredible catalyst. Elon Musk quoted, he tweeted this one. I'm curious to read this. The more I think about robotaxis and humanoid robots, the more absurd their valuation becomes. Absurd meaning the current valuation is undervaluing Tesla. Now, he's always been saying that it's undervalued. And Cathie Woods has always said it's undervalued. This is up 1.6% today. Now, we did have a buy-in on the algorithm at 177. You're trading at 172. If you think that his pay package tomorrow will be approved, then I think you buy it. If you think his pay package will be denied, do not buy this stock. I think you're gambling. I think it's a 50-50 call. I think most retail investors are voting yes. Because I think most retail investors, there was a stat yesterday, and I saw it on the screen. If you had invested $10,000 in 2018 when Elon Musk's performance, when his pay package was approved by the board and by the shareholders, again, it was approved by the board and approved by the shareholders. If you had put $10,000 in there today, even with this crazy pullback, today, that $10,000 is worth $80,000. I mean, if the man doesn't deserve the pay package that was put in there, I don't know what for. Everybody in 2018 was saying, I wouldn't take that pay package. I'm not a huge Elon Musk fan. Trust me. I think the man oversells what he does. I am a big fan of the cars. I am a big fan of the company. I'm not a big fan of the stock. I have, several times sold in and out of this stock, during which time I should have just held. I mean, look at that 2019. Look at that dip during COVID, and he brought it rip-roaring back. In fact, August of that year, he had a 5-for-1 stock split, and it continued up. So I do think that you're looking at between 140 and 250. I think that's your range for the next year. But I don't know what Cathie Woods is going to say. She's going to come out with some 4,000. Now, mind you, when she initially valued Tesla, she was right on the freaking money. So you got to listen to that one. If you're in Tesla, you got to look at it. Now, this was a discussion with Brad Gerstner from CNBC yesterday. He did say, like I said, he's 60% in the market. He's not 100%. He did say he's not buying NVIDIA right now. But he did say if he didn't own NVIDIA, he would be buying it right here. He bought a significant amount of Apple after the WWDC, he said. It's a great conversation. If you have 9 minutes, I would suggest you watch it. He talks about Snowflake. He talks about Meta. And he also talks about Uber. And Uber's an interesting one because it's back over 70. I think this is an $80 stock. I bought more at 63 when the algorithm said to get in. Did you buy more? I don't know. But again, we had these buys. These buys, the only one that made sense was this $68 one when you got a confirmation, but it didn't last long. It died after earnings. The earnings were good. We've made that earnings gap down. We've filled it now. We've filled the earnings gap down. I would expect this one to continue moving. Now, it's oversold. 74 on the RSI. It's overbought. But the MACD just crossing up, just continuing its move. It's just gotten over the 200-day, which, it has to hold that 200-day. You can see right now it's trying to hold on to it. This candle goes all the way up to 71.63. That 200-day is about 71.59. If we close today over 71.59, that's good news. If we don't, that is the resistance level. So that will be an area where if you have the ability to do this without a tax event, if it's in your brokerage account, I wouldn't suggest trading it. If this is in your IRA and you have an ability to trim it, if we close below 71.59, I would say, hey, you might want to look at trimming it. He still loves the stock. Now, Brad said yesterday, he said $98 price target. He said he thinks it's $98. He loves the stock. So he did say, he said with this, if Elon didn't announce the robo-taxis here when it was at $80, he said if Elon didn't announce that, this would be a $100 stock. So to get ready, that was just a pullback. So what you're seeing here is what's similar here. You're seeing that pullback on the weekly. We're getting ready to go. Now, the resistance is going to be about 80. If you get up there, you're at 71.68 right now, but it will be 80. But I do think if you have 10 minutes of your day, I think that was a great conversation. I really like Brad Gerstner, by the way. You should Alt Capital, ALTCAP. That's his Twitter handle. You should absolutely follow him. He's a fascinating individual. Now, let's say you're into crypto. Steve Kress from the quant team at Seeking Alpha, he wrote this great article, Top 5 Crypto Focused ETFs. I'm not into, but he likes it. Crypto investing is Bitcoin, Ethereum, Solana. He goes over everything. Coinbase. I liked it. I think you'll learn a lot from that one if you want to read it. I will include it in the newsletter. Now, this is what's interesting. This is a stock chart. On the left, you'll see Apple. They did a 20 for 1, 25 for 1. I forget what it was. 2020 stock split might have been 5 for 1. It wasn't as big as NVIDIA, which is 10 for 1. Now, look at the way Apple ran up into the split. Look at the way that NVIDIA is running up into the split. Trendspider posted this yesterday. And I really want to look at NVIDIA because they also got a price upgrade this morning as well. Price target raised at Oppenheimer. I think it's 150. Yes, they went from 110 to 150. So let's take a look at the live chart of NVIDIA, because what we want to look at is, are we looking at that move down? We're not seeing it. You still have confirmation. Boy, don't you wish you got in on the algorithm at 83, 82? Wouldn't that have been a great one? Because ever since then, this one has run. Now we've got gaps all over the place. 47 days, 47%. That's a fantastic. MACD, crazy high. RSI, crazy high. Do you want to get out of this one? Absolutely not. Do you want to buy into it? I don't know. I've said it before. It's just as likely to go to 80 as it is 150. I don't know where this one's going. Right now you have confirmation. It's just a little high. If you don't own this and you want exposure to it, just freaking buy it. Again, the price target was raised to 150. If we go over here to Seeking Alpha and we look at it, it's a strong buy on Wall Street. It's a hold in the quant. And the reason is the valuation. The valuation is the only thing in the quant that is an F. That's the only thing. But the PEG ratio is super, super low. Average price target 124.33. You're there. You're there. So when we look at the valuation, remember, the PEG is the favorite ratio. It is trading underneath the sector. So I don't think the valuation has anything to do with this. This has been a hold in the quant for the longest time. I mean, and again, it's run up the longest time. We can see 3 years, it's been a hold in the quant, and that valuation is it. I would say the valuation doesn't matter. NVIDIA rated as the strongest stock among the Magnificent Seven. Tesla is the weakest. This could turn on its head and flip if the August announcement of the robotaxis is as good as Elon thinks it is. He's going to hype that crap up. If you want to read this one's an interesting one. Again, NVIDIA's rated the top stock. My biggest position, I don't even have NVIDIA as my top 5 biggest positions. I'd say it's probably in my top 20. But it's not my biggest by far at all. I have exposure to it through QQQ, through other ETFs. I have exposure. XLK, I have a ton of exposure to NVIDIA. But I just don't own it outright enough. I've said it before. I think I have a couple $100,000. It's not enough. This one, I just didn't see it. It's not enough. Now let's talk about earnings. Oracle, we can go over to my favorite website for earnings. It is earningshub.com. You can see they killed it. They reported $1.63. They beat by 6%. It's the revenue that killed it. Revenue was down 2%. Now Oracle is up. Well, why is it up? Well, had it just been for earnings, Oracle probably would be down. But if you look at Oracle's chart, come on. Work Trendspider. If you look at Oracle's earnings, they announced a partnership. And that partnership was with Google and Microsoft, with the cloud. If they didn't have that announcement, the stock would be down. It's up 11% right now. It's at 138. I mean, again, the algorithm had you buying at 122. I was saying I don't know that you want to buy 132 because I thought 130 was going to be your resistance. Your old resistance turns into new support. So at 138, do you buy it? No, it is running. The earnings don't justify this. This was just an announcement of a partnership, but the future earnings probably will justify it. So wait a couple of days if you want Oracle and buy. Again, I've loved this since 130. I don't know why I didn't get it, but God, the one earnings that I think might be incredibly good is AVGO. It's up 2% today. Again, we talked about how they reported 1099 last time. Their estimate is 1084. They reported 11.96. Their estimate for revenue is 12 billion. An AVGO, I do own this one. I own mid 5 figures on this one. It has grown. I started adding it at about 1350, so I'm not killing it on this one. But we're at all-time highs. The earnings better be good. We're running into there with an overbought stock. The RSI is at, 71. I would not buy it into these earnings. If you got in at 1350, I'm holding this. This is a long-term play. So understand, this is a long-term play. I'm not looking to get in and out of this one. The earnings are tonight. This will be a catalyst. Your biggest catalyst today is going to be at 2 p.m. though. That's when the Fed announces, did we lower rates or did we keep rates the same? They're going to keep rates the same. At 2:30, Powell starts speaking. That is where you're going to see a ton of movement in the market. We could start to take off if he hints that we may see a rate cut in July. We may take off if he hints that we may see 2 rate cuts this year before the election. Right now, the market is flying, absolutely flying. So tonight, watch these earnings because this is just going to be icing on the cake. If these earnings come in good, and we already had like a 2% update today in this one, you're going to see it up another 4 or 5%. You're going to see this one move. Again, this is another one of the AI chip plays. I like it. Broadcom does a lot of that. Now, I was watching CNBC last night, and I know Vertiv, Seeking Alpha about 2 weeks ago, they posted an article that Vertiv Holdings was the AI play that NVIDIA wasn't, and it still has a ton of room to run. I wanted to point this out. I saw the CEO on CNBC yesterday. I was super impressed. And we've seen a pullback in this one. It is up 5% today to $94. Well, where's the resistance? That's up here at 96. That would be a great move. And Vertiv is a solid stock. If we go over here and we look at it, it's got an F on the valuation, but look at the peg. Again, we look at the peg. There's 60% under the sector. And everything else says it's a super strong buy. The valuation is the only thing. Wall Street has the price target at 101. You're trading at 93. 101 would be a nice move up. That would almost be 10%. They just declared a 2.5 cent share. Look, you traded all the way up to 109, so you hit that 107. It is in the cards. This one could move higher. I like this one. I was impressed with the CEO. I thought it was a pretty good interview. I'll be looking at that one a little bit. Now, CELH, Brad Freeman, typed up, CLH leadership just now told the continued inventory optimizations by Pepsi could impact revenue by Q2 by 20 to 30 million. It thinks things are looking better now and optimizations are wrapping up. This is a stock that you guys have told me. Now, I saw them in Costco yesterday. I went to Costco to shop. Celsius was there. Have we seen this turnaround? I would argue you wait for the algorithm to tell you to buy in. The algorithm makes you 177%. Buying and holding makes you 254%. Why do you want to hold? Because we don't know where the bottom is. And if the bottom is this red candle right here, which was yesterday morning, and the low is 63, that would point to this kind of back here being a pretty good support level. And now if we move back up, you don't have a catalyst until their next earnings, which is August. Be patient. If you're going to come back down here to this range right here, which it was trading in for a while between 47 and 62, again, I don't think that this one's crazy valued based on their growth. The growth could be what is fine. Now, the valuation, when you go and look at it, they don't give a PEG ratio, and they're not making money. But the growth is incredible, 81%. Year over year revenue growth. Now that's going to be hard to live up to, that growth. Remember, when you start comparing stuff, stocks get dinged because if they had, if say they have 50% growth the next year, revenue, 51% is where it's expected to grow. The street might take that one down and say, you know what? They're not growing at 81%. I don't want to own this stock. So be careful with this one. It's an interesting one. I thought this note from Brad Freeman was a solid one yesterday. He does a lot of good analysis. I don't know what this means, but it's big. AppLovin was down 7% today. I always say any reaction in the market is an overreaction. And so APP was down 7% just on news that Apple may change their some token or something. This could be an opportunity for you. Again, we got the algorithm lost you 4%. Now the algorithm makes you 164% versus buying and holding makes you 124% over 2 years, 24 positions. Your average win 22%. So you want to take a look at this one, but you want to buy it when the algorithm tells you to buy it. This has been a quote unquote winner, a ripper. And you can see, I first alerted you here, hey, it was a good time to buy this one. Down here at 14, that was back in 2023, last year at this time. I said, you got confirmation. Boy, that was the time to buy it. But now you've got a little bit of a turn down, it's a little bit extended. You may want to just take a little look at this one. Now, from a quant standpoint, it's a strong buy. The only thing that it's got is the valuation. Again, it's expensive, but you're paying for the growth. The forward peg, 0.72, 63% against the sector. So I do think that article deserves a little read, a little more research, blah, blah, blah. Are we in an AI bubble? Absolutely. Absolutely, we're in an AI bubble. But this is a great Seeking Alpha analyst all way in. This was a great article. I really like that one. It includes all of your favorite names: NVIDIA, Apple, Google, Amazon, everything that you want. I like that article. Taiwan Semi rises as Bank of America sees positive from Apple Intelligence Computex. It's just kind of downrange. Lin raises price target on Taiwan Semi to 180. He's probably got to raise it again because Taiwan Semi is almost up there. It's at 173. It's up 4% to almost 5% today. So he's going to have to raise his price target again. That's just what's crazy. What's crazy about this one? Again, the algorithm makes you 98%. Buying and holding makes you 93%. You want to listen to the algorithm. Algorithm got you in at 164. And so, your average win is 9.77% on this one. So far, you're up 9.22. You don't want to buy it. But this old resistance, and mind you, this was old resistance. Look at that. Is now support. So your support is about 160, 158, 160. That's where your support is. But again, Bank of America, they raised their price target. God. Wall Street's most overbought stocks include NVIDIA, Costco, Eli Lilly, and more. Here's the top 10 overbought stocks. It's just based on the daily RSI. You can look at it in Trendspider. You can do it. But that article points out we are at an inflection point. We are running really, really hot. Noah, these are the social requests. Noah, bought Apple at 170, small portfolio. Can't decide if I should sell or add to it. Noah, you are asking the wrong man. And I'll tell you, the reason you're asking the wrong man is because I don't sell Apple. I don't care if you have if you've got a small portfolio, the best thing you can do is hold on to your winners. We talked about Bill Gates yesterday getting rid of Microsoft. He'd be a trillionaire if he didn't get rid of some of his Microsoft and decide, I've got to diversify. Hold on to your winners. Apple is clearly winning right now. Should you sell it? In my mind, no. In your mind, if you are losing sleep over this, Noah, and Apple is too far extended for you, absolutely sell it. That is my gauge as to buy and sell. You guys know I hate telling you guys when to buy and sell. I hate it. Your body's going to tell you when to buy and sell. And if you can't decide when to buy and sell, get Trendspider. Noah, get Trendspider. You want to know why? Trendspider, the 4-hour algorithm, makes you 59.2% over 24 months. 30 positions. Sure, you lose. See all that red right here? Sure, you lose on some positions. But you could have taken some of these and said, you know what? I don't want to buy it here. It doesn't have confirmation. Even if it does, like this one right here at 185. The next 3 candles didn't have confirmation. Why would you buy it? This one, 182. Next 3 candles didn't have confirmation. Why would you buy it? All the way down here, 173. Didn't have confirmation. Why would you buy it? You got confirmation right here at 174. Could have bought it there. If we were going to go on that legendary run, this was going to be it. Oh, no, I'm going to fake you out and I'm going to go down. Didn't have confirmation. The algorithm takes emotion out of the trade and it tells you, I think you should get in here, but ultimately you have the decision. Does this look like a stock that is too far run? We can look at a weekly on this one. We talk about it all the time. Bottom left to upper right. Anytime this has gotten below the 50-day on the weekly chart here, you've wanted to get into the stock. Anytime it's been below the 50-day. Do you time it perfectly? No. But look at this. The MACD just crossed up. The MACD just crossed up. You're not too far up. The RSI, a little bit overbought at 71. But you want to let your winners run. Noah, in my mind, selling Apple, I would not be retired at 49 had I sold Apple. I mean, we can even look at a monthly on this one. And there were plenty of times that I was like, ooh, I should sell Apple. 2018. This nice little downturn right here into this September to December 2018. I lost a ton of money in that one because I was into Apple. This was when they tried to raise rate 32%. Did I sell? Nah. You can look at this one. I mean, look at this one right here. This is 2013, 2012, 40%. Did I sell? No, I just held on to it. This one right here, 2008 to the housing crisis, another 40%. I am not the best protector of capital, but this is a stock that I wouldn't know when to get back in. And I can tell you, here's a good example, Noah. NVIDIA. Remember when NVIDIA was 500, I said, you know what? It's run a lot. I think I can get it under 500. I sold half my position in NVIDIA. I sold half my position at 500. And that's by the way, that's at 50. So just for context, that's at 50. And see, I did it right. I sold, I think it was back here in February somewhere. Yeah, I know it. I pulled back. I never bought back in. And you want to know why I never bought back in? I'm dumb. Emotions play crazy things with you. When you get out of a stock, I would urge you just to trim. Sell one share, Noah. If you are losing sleep, I would sell one share. See how it feels? That's the best advice I can give you. Jake from Spotify. I am long ASTS since $5. What the hell is ASTS? ASTS is AS Space Mobile. Okay. Also looking at Cult F. No, it's a penny stock. No, I don't care about it. And Rocket Labs. None of these make money. Jake, trade them. If you're long them, trade. I mean, ASTS is up at $10 and you bought in at $5. Kudos. Do you think that ASTS is a fantastic, are they just killing it with money? This could be your moonshot. This could be the moonshot that makes you $1 million. Revenue growth, 95% down. I mean, it's a strong buy on the quant. They love it, but it's not my thing. Am I going to lead you in here? No. Also looking at Rocket Labs, same kind of thing. I mean, again, these are moonshots. Your portfolio should not be built on these stocks. These stocks are ones that you put something into because you know about them. You can trade them, but these are not building portfolios. These are gambles. And so what you want to do with gambles is, if I go down to zero, is that going to hurt me? Because that literally could happen in some of these names. It literally could happen. Now, Rocket Labs has a $2.25 billion market cap, probably not going completely bust, but we can look at it. Let's look at it here in FinViz, because if you're trading these stocks, I don't know that you have Seeking Alpha, so I'll do it in FinViz. You're not making money. Your cash on hand, $1.52. You have $139 million. What's 139 million times 1.5?
That would be 208,500,000.
So ASTS, they have about 2 years. 2 years of cash because they're losing $90 million. They're losing $90 million a year. So that's what you want to do. Rocket Labs, let's look at Rocket Labs. They ain't making money. They're losing $181 million. They have $1 per of cash. So they're losing $188 million. And they have $488 million in cash. I mean, that's what you're doing. You're just waiting out to see, hey, are these guys going to make a business out of this? And if they do, great, you're going to win. But if they don't, you could have problems. Akabels from Instagram. Gary, I hope you're doing well. Haven't listened to the pod today, meaning yesterday. Shame on you. may have covered it, but I don't have a position in DELL yet, and I'm looking to get in around right now when it's at about 130. What are your thoughts? Should I wait? I know you hate these types of questions, so sorry in advance. I have very little time around my study and work right now to do in-depth research at the moment, but I have some cash available, and I'd like to spend it. My guidance to anybody who says they don't have time to do the research, VOO and chill, or QQQ and chill. If you don't have time to do the research to get in, that means you don't have the time to research when to get out. And that's the dangerous part about holding individual stocks, is you have to know when to get in and out. Something like Apple, I'm not worried about. Something like Microsoft, I'm not worried about. Something like Amazon, I'm not worried about. Something like Meta, I'm not too worried about. You are going to deal, something like NVIDIA, I'm not worried about. You're going to deal with the fluctuation. But these companies all make sense right now to buy and hold. DELL, in my mind, it's a buy and hold. I like it here at 130. We haven't had a cross up here for the MACD, but it looks like it's going to cross up either today or tomorrow. Your RSI, you're oversold at 39. I mean, look at how that RSI is leveling off. You are just leveling off. If we look at a weekly on this one, it's just cooled off. People are like, when's DELL going to take off? Well, it might be another month until this freaking one takes off. We're heading into probably the worst seasonal months of DELL, because if we look at this, I think it just IPO'd in 2018. Let me make sure that's as far back as we can go. Yeah, it IPO'd in December of 2018. Now, here, June, you're only up 50% of the time with a 0.77. So it's a coin flip. July, it's even worse. Mean change of 2.96, but you only win 40% of the time. You want to buy probably in July because, again, I've said it before. I think we're seeing a sideways trade. Now, DELL just did declare a dividend. If we go over here and we look at DELL in the quant, it's a hold. And it's a buy on Wall Street. I don't know that. I think the price target is around 130. We can take a look at that. But it's a hold here. Your growth is a B. And this is part of the problem, is that they actually, the revenue was down 7.58%. If you look at their profitability, the margin is what really got killed. Sector median margin is 50%. They're only making 23%. The valuation, again, is a little bit stretched. But it's not bad. It's not bad at all. Your PEG, you got a B. You're 27%, your forward PEG, 27% under the sector. I would rather own this than as SMCI. I do think that this one has a better opportunity than SMCI. But I would urge you, Aki, if you don't have time to research when to get in, I would do some soul searching and say, do I have research time to get out? I don't think the DELL is one that you buy and hold because I think there are opportunities out there to trade DELL. I am looking at it as long-term. Lower AI profits are good. You can see all of these guys have strong buys. Let's look at the price target from Wall Street. Price target from Wall Street, 157, so it's a 20% upgrade. And that's that, you look at the 5-year path, it's right on target. And we've been trading right on that. Now we're well below that. 131 to 157, you're well below. You haven't been this far below since they brought the price target down back in 2021. So they brought it back down to 56, and it just kept rolling here. So it's rolling along the price target. You've got 23 analysts in the last 90 days. Your revisions on this one, revisions up 17, 1 down. Your revisions up on revenue, 14 up, 0 down. So I do think it's a good buy. I think you're getting a nice leveling off here. But I would argue if you say you don't have time, that's the only caveat that I would put. Z-Hype from Spotify. Can you please offer your opinion on American Airlines and buying for the long haul while it's down 50%? I don't think you buy airlines for the long haul. I mean, I think airlines are ones that you trade. And I say that just, hey, these are stocks that go through crazy cycles. American Airlines, I don't know too much about it. But let's see, American Airlines. Oh, I did Alcoa. Airlines. It's AAL. AAL is the symbol. You got to put the symbol in there for me to look at it. The algorithm makes you 2% So the algorithm makes you 2% versus losing 15% with buy and hold over 2 years. You have 30 positions, so it's about 1 per month. Your average win 10%, your average loss 4.3. Algorithm got you in here at 1143. You're trading at 1160. You've got a gap up here. This is where they announced some guidance down, and they took all the airlines down. I'm not a huge American fan. They've got some negotiations with their stewardesses, their flight attendants. I don't like airlines. I mean, Z-Hype, I just don't like airlines. If you're going to buy airlines, I would buy Delta. It's best in class. I would also buy Love. Love just got that, and they got pulled back. Elliott Management's in Love, and they're going to create some stuff. But Delta, you make 92% in the algorithm. What do you make if you buy and hold? 51%. That's over 2 years, 22 positions. Now, it has you out. I think airlines are just weak. But I do think that Delta probably has an ability to continue to grow. And yes, I may be biased because I'm here in Atlanta. But American Airlines, I don't know enough about to guide you. I would say, hey, do your own research. I'm not a huge airline fan at all. Damone Bartow, I got one for you tomorrow. Canadian Pacific, Kansas City, ticker CP. Let's see. CP, Canadian Pacific, Kansas City Limited. Their rail competition. Let's see. CP. Ooh. You know what I always talk about? Bottom left, upper right. That looks like some weakness in the railroads for me. And that looks like a chart that I don't want to trade. Bottom left to upper right. This is in such a range that I can't imagine you wanting to trade this one right here. I would say that's your bottom, and I'd say that's your top. And I can even take this out. Remove this channel, because look at the price. You pull the price back, back to this time. Look at this price. That is your price. This is your range. Your range is from 68 to 82. And when you get above you buy in the bottom and you sell at the top. Simple as that. I don't even need to go into this one. I mean, we can look at it from a standpoint of here. CP. Let's see. It's a hold. Valuation is D. I don't think anybody's got. Momentum is a C. Yeah, I mean, it's just expensive. It's expensive. And if we look at the growth has a C plus. Revenue year over year up 49%. But then you look at these other metrics. I just, again, it's a railroad. It doesn't get me excited. Damone. I just can't imagine myself saying, yeah, let's load up on Canadian Pacific. But, with that range, I think you've got a clear trading direction. And I think you clearly buy it between 70 and 75, and then you sell it between 75 and 80. I mean, you can make a lot of money doing that. And that's not a ding on the stock. That's just saying, hey, it's in this range. Wait for the MACD on this weekly to cross up while your RSI is down, and you can find a great way to enter. Let's talk about some scans. Market looks like it's cooled off a little bit, but Apple is still flying. Google has a buy-in here. 178. It got another MACD cross up, so it's got a push probably higher. Do not think that Apple partnership with OpenAI is the death of Google. Google is on their own devices. Google has Android. Gemini is flying. Usage of Gemini is up. They will be one of the winners when it comes to AI. It doesn't mean, they will also partner with Apple. Apple made it clear that the partnership with OpenAI is interchangeable. And I believe that Apple will create their own large language model and boot everyone to the curb where they don't have to pay a damn thing. And I don't know the partnership, but OpenAI may actually be paying Apple for this, which is another boost for Apple. But don't throw away Google. That's an interesting one. We have Ulta. One that I found super interesting and I should have bought was ANET. This is Arista Networks. This is what, one of these AI plays. We had a buy in here at 302. You're trading at 308. Do you want to buy it? Well, your top is going to be about 325 or so. You're going to fill this gap up to 316. So if you want to make some money, that MACD, super low. The RSI coming off of oversold and, kind of no man's land in 47, but it hasn't been below 50 for very long. You could have gotten this one at 256. The algorithm makes you 143%. Now, that's a good one. But if you buy and hold this one, you've made 226%. And it's a strong buy in the quant. We can go over here and look. We can say, hey, look, what's Arista Networks? Well, it's a strong buy. Again, it's one of the big, it's number 2 out of 45 in information technology and communications equipment. If you look at this one, what's number 1? Inseego? I don't even know Inseego, but I know Arista Networks. And that's an interesting one. Another interesting one that I got across up is TOST. TOST is toast. If you go into your restaurant and you're able to order on an app, most likely it's toast. And toast is just a way for these folks to offer. Now, we talked about a range here before, and I said the bottom range is going to be $21.46. We didn't get down there, but we got a nice entry at $22. You're trading at $22.73. It's already crossed the 200-day. So most likely, we are probably heading back up to the 25 realm. Simple as that. Now, I wouldn't trade this on the algorithm. I would look for the entries, but I would get out as soon. I would put a nice little stop loss here at 21. If you buy at 22.18, say you buy at 22.71, I would put your stop loss at 22.18. Because if you get down to that, then it looks like that one's a loser. But the RSI is super low. The MACD is super low. I think this is just a pullback. And we talk about bottom left to upper right. This one is in a trading range. So you do want to respect that 25 as your resistance level. This is just IPOs. I mean, trust me, IPOs you want to let them settle in for about a year. This one goes all the way back to 2022. So you want to let them settle in for a year, and then you can find your trading range. And that's what it does. But I like that chart. I like to do it. We got some low-cost ETF. We have some leveraged ETFs, covered calls. Where do you get all this? You get all of this at the Daily Stock Pick newsletter. Sign up. It's free. I provide all of this stuff for free. You'll get all of the strategies, everything that I just talked about, you'll get it for free. It's right there. If you want to support the podcast, or if you want Trendspider, we talked about it. Trendspider is the charting program that I use. You will get my 4-hour algorithm. You will get a 65-minute algorithm. You will get a 5-minute algorithm to actually trade on. You'll get real-time scanners, back testing, dynamic alerts, automated analysis, everything, trading bots. You'll get everything. And it's half off when you use my link, $53 a month. You can get started at $50. You don't need this $98.50. Unless you're one of the expert traders. If you think you're going to use this, then upgrade. Get the $98.50. But in this one, I think you can use this one at $53. I think it's perfectly fine. This is the level that I use. Trust me, I don't use half of what Trendspider has. I use it to manage my portfolio. Now, the second link that you have here is Seeking Alpha Premium. Seeking Alpha Premium is just access to the quant, access to all of those fundamental data that you see in Seeking Alpha, access to all of the analysis in Seeking Alpha. You get everything. Now, the third link that you have is Alpha Picks. We talked about the Alpha Picks portfolio at the beginning. That is the third link. I save you $50 off of that. That is a fantastic, fantastic program. It gives me ideas all the time of stocks I've never even heard about. Like we talked about, 35 different stocks. And then you've got other support stuff. You can join Webull. If you don't want to join Trendspider and you don't have a charting program that you use on your desktop, do not use your phone. Even though Webull has the best phone app, it's still not good enough. It's still not good enough to see what you need to see. You need a larger screen. Like an iPad would probably do it if you want to use the Webull app on an iPad. But you want a big screen so that you can see the movement. Charts are like, living things. You want to identify, okay, where's this thing going to go? Think of it as like a shark in the water. You want to stay away from the shark. You got to know where it's going to move. So you don't want murky water. You don't want a little screen that, little murky water. You want to know where that shark's going so you can stay away from it. In this case, you want to know where the stock chart is going so you can chase it or stay away from it. One or the other. But again, the link tree is where you go. Any questions that you have, you can hit me. All the socials are up here, my email address, or just comment on something and I'll take care of it. I'll answer your question. Have a great day. Let's enjoy the Fed meeting. Let's enjoy Apple up. I'll do a little indices check. Let's see. Because I do like to look at I'm one of those dudes. I don't get nervous looking at my portfolio like 80 times a day. Again, because I've been fairly successful. But I do like this one. Let's say, I'm up 2.3%. And mind you, 2.3% is the NASDAQ is up 1.72, 2.3%. I'll take 2.3%. After yesterday being up almost 4% or 5%, whatever Apple was. I mean, my portfolio was up just with Apple. It was crazy yesterday. Okay, take care. We didn't get interrupted by Penny once. Have fun. Enjoy your day. I hope you guys are making money. If you are, tip me. Remember, tips are out there. Or just buy one of the programs. Or sign up for the paid newsletter. Either one. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell.